Thank you for joining this RealEstate.Exchange webinar. My name is Gabriel. I work for DigiShares and RealEstate.Exchange here in Miami. We have a great list of panelists today and speakers. And we're going to first get started with a demo by our own Martin Hotka. Yeah, we're just a brief introduction leading up to it. We're looking to make RealEstate.Exchange into the leading, the go-to place where tokenized real estate shares will be traded in the world. And of course, also making sure the exchange is compliant, and you'll hear from a lot of our speakers today about that aspect as well. So thank you for all of your interest in RealEstate.Exchange. Yeah, Martin, the floor is yours for the demo on features and functionalities.
Yep. Hello, everyone. I'll just share my screen. And I hope everyone sees the screen. And so basically, this will be the demo for RealEstate.Exchange. The platform is still under development, so things can change. There is also a lot of mock data. So right now we are introduced to the login/registration page. The only thing you need to connect to the platform is a wallet, a Web3 wallet, right? But you might ask, what if I don't have a Web3 wallet? Well, we also have social logins. So you can either use your email, your Gmail account, Apple ID, or other, let's say, Facebook and so on. And what's great about this is that once you connect this account, a smart wallet is created for you, right? Which means that you always just need to connect with your email or your favorite social login, and the smart wallet is created. So then basically you can self-custody the tokens, because after the smart wallet is created, you can then also export the wallet into your MetaMask and self-custody it. Now, another options which we support is, for example, Wallet Connect. So let's say you have just a wallet in your phone and you don't want to connect it to your computer, so you can just simply scan a Wallet Connect QR code and you are logged in or registered. Now, we also support a lot of injected wallets. It's over 400, and yeah, basically anyone can choose the wallet they prefer in this regard. So yeah, even like offline wallets if needed. In this demo, I will be logging in with MetaMask, which is my injected wallet, into my browser. And I log in as my investor account. And once I'm logged in, I also need to sign a Ethereum message on the blockchain with which I verify that I own this wallet. And basically this message contains a nonce, which is a unique identifier, which then gets expired. So now we are on the platform, and here I am already an existing user. But if you would be a new user, you will also need to fulfill KYC, which can be also seen with the big unverified button. We are working with Privado ID, formerly known as Polygon, on a decentralized ID solution called Ditto, which is decentralized ID for tokenization. What this means is that you have a verifiable credential where the KYC data from a KYC provider is stored, and this data is in your wallet, so you hold it. It's not in the platform. Only you can say who can see the data. This way, you can use this credential also in other platforms. So let's say you already registered in a different exchange, but you have a verifiable credential in your wallet. You can just reuse it and essentially skip the whole KYC process. Now, regarding some of the functionalities, here you can choose the real estate tokens. There are also featured assets, topics of the day, we call it. And also we can check the account details and notifications. So here you see the notifications. And now in the platform itself, you are trading on the blockchain. So this means that you need some form of stablecoin or the listed real estate tokens which are on the platform. Here in the account settings, you can also buy or I mean on-ramp this currency. So we support Coinbase. So for example, if you need USDC to facilitate the trade, you can simply just click with your wallet already, log in into your Coinbase on-ramp, and once you are logged in, you can purchase your stablecoins needed. Once this is finished, you can start trading. Now there's also the activity tab, which shows all the activities, and that's that. Now in the platform, I will facilitate a quick open sell order of RE22 tokens. And once I accept the terms, I place an order. And what this placing an order means is that it gets sent to our ATS, which is Texture Capital. And Richard will tell you all about it later on. And basically, once our ATS matches orders, the orders are then executed on the blockchain. So after they're verified and matched, the orders get peer-to-peer settled on the blockchain itself. And then, yeah, then there are some quality of life features, like you can see pause orders, canceled orders, and so on. You can see how the real estate was performing, monthly graphs, and so on. That's all. Thank you very much.
All right. Thank you. Thank you so much, Martin. Really exciting stuff. The next speaker is our own Anne Nguyen. She is our legal counsel, and she'll be talking about European centric legal aspects. So Anne, the floor is yours.
Yes, thank you, Gabriel. I'll just share my screen. All right, can you see my screen?
Yep.
Yeah, perfect. Well, as Gabriel said, my name is Anne. I represent the legal counsel at DigiShares and RE.X. And I will briefly be presenting on the European blockchain sandbox. As some of you may know, DigiShares and RE.X was selected to be a part of the second cohort for the European blockchain sandbox. And what the European Blockchain Sandbox / EBS is that it's an initiative created by the European Commission to help blockchain / DLT companies test their projects in a controlled environment. So essentially, it's designed to allow companies to try out their ideas while working directly with regulators. As in this way, companies can get guidance on how to follow the law across various different industries. So essentially what happens is that the sandbox brings together regulators, legal experts, and companies to test out new blockchain solutions across the EU. And so the main goal is to make sure that innovative blockchain technology can develop while still being in line with the European regulations. So to explain on a more practical level, what goes on is that each cohort, the EU Commission's or the Blockchain Sandbox selects 20 use cases within DLT. And then each use case is paired off with several regulators or relevant authorities in order to tackle any regulatory issues that the use case might have. And so in our case, we applied with RE.X as our use case, so the RealEstate.Exchange. And right now we're still in the beginning phases of the whole process. We've been selected and are currently waiting to be assigned to specific regulators and authorities. But what we aim to achieve with this sandbox is to clarify some of the issues that we have, for instance, with licensing. So as some of you may know, MiCA, or the Markets in Crypto Asset Regulation in the EU, has already partially been enforced and will be fully enforced by the end of this year. And with the enforcement of MiCA, there is still some legal uncertainty and overlapping with traditional financial regulation that needs to be cleared up and in many circumstances be evaluated on a case-by-case basis. So what the sandbox allows us to do is to, well, present RE.X and to discuss directly with the regulators to ensure that we are fully compliant in the EU and that our implementation into said market will be as smooth and easy as possible in terms of from a regulatory perspective, at least. Yeah. And also while the aim is to, of course, promote innovation and so on, there is a product at the end of each cohort. The European Blockchain Sandbox, alongside the law firm Bird & Bird, publishes this best practice report from all the use cases. And if you're interested, you can always read the best practice report from last year, and they will also be making one from this year as well. Yep, that's all from my side.
Thank you, Anne. We actually have a question that came in through the Q&A from Roger. And just a reminder to everyone else, I should have said this at the start, but please participate through the Q&A section at the bottom. So Roger's asking, how would I know that the real estate tokens on the blockchain are actually backed by real estate in real life?
Yeah, that was a good question, but it's very much contractually based. I would say the way it works in the EU, at least with MiCA coming up, to use that as an example. There are a lot of requirements and licensing going on when you even want to issue any of these tokens. So you have to go through a very extensive process of getting authorized as a crypto as a service provider. And then you need to make a white paper for each token that you publish, and you need to make contractual relationships. It very much functions similarly to how it would be with regular securities. So it really should not be treated any differently in this way. And so it is contractually based, it is legally based on MiCA and national regulation as well. So
yeah, I guess you could replace white paper by investor memorandum, and it's
exactly
pretty much the same idea.
Yeah.
And people will be signing subscription agreements. Investors will be signing them and have rights that way. So
exactly.
Perfect. Thank you, Anne. So moving along to the next speaker, Richard Johnson from Texture Capital. He's our broker-dealer and alternative trading system partner in the US, so playing an absolutely key role here in RealEstate.Exchange. Richard will be speaking a little bit about just US regulatory aspects and similar topics. So Richard, the floor is yours.
Thanks, Gabriel. Hello, everyone. Great to be here on this webinar. Before I get started, I'd like to encourage anyone who's viewing. I think we've got almost 100 participants out there. If you have any questions, please throw them on the chat. We can kind of turn this maybe into a bit of an AMA. Happy to answer any questions you have. I have some kind of FAQs that I thought I would go through on this call today. So first of all, my name is Richard Johnson. I'm the founder and CEO of Texture Capital. Texture is a SEC-registered FINRA member broker-dealer here in the US. We help companies raise capital through digital securities offerings, also known as security token offerings. And we have an ATS, which stands for Alternative Trading System, for secondary trading of these tokens. And we have entered into a partnership with DigiShares such that our ATS will be handling all the secondary trading for real estate security tokens through the RE.X, through the RealEstate.Exchange, just on the US side. What does some of these questions I have here, and remember, please put them in the chat. What is a digital securities broker dealer, which is what Texture is? So there are 4,000 broker dealers out in the US right now, ranging from very big ones like Goldman Sachs to actually quite a lot of small ones focused on private placements. There are about 10 or 12 or something like that who have specific licenses for digital securities. It's people like Texture who went in fairly early to the SEC with a regulatory first attitude, wanting to get permissions to use blockchain in capital markets. In fact, our mission at Texture is to try and use blockchain to transform capital markets. We're a big believer this is a revolutionary technology, and I think it can make significant benefits across all of capital markets. Of course, in this call, we're focusing on the real estate sector. What is an ATS? So an ATS it stands for Alternative Trading System. It is regulated by the SEC under the Exchange Act. It's basically a kind of like a mini exchange you can think of. It's a permitted way for broker-dealers to electronically cross orders. Cross orders, match orders, whatever word you want to use. So again, we're one of only a few that can do this for digital securities. To become an ATS as well, we have to file paperwork with the SEC with very specific rules on how it works. And that gets reviewed. I won't say get us approved, but it gets reviewed and they kind of sign off on it. And yeah, and if we ever make changes, we have to go back to the SEC. So we're a very regulated entity here. I've got some questions here. I want to touch on the previous question, which I think was by someone called Roger. How do we know that the real estate tokens on the blockchain are actually backed by real estate in real life? Well, that's partly what Texture does, part of our role. I think, DigiShares does it as well. But as a regulated broker dealer, we conduct due diligence on all the security tokens on our platform. That means we have an engagement letter, engagement arrangement with each issuer. We look at their financials, we look at their operating agreements, we make sure the company's real. You'd be surprised some of the things I've seen. And we'd make sure, that none of the owners or managers of the investment are what's called bad actors, people who have a bad history, perhaps of fraud and so forth. So we do not sign off and say this is a good investment, this is a bad investment, and we don't make recommendations, but we do due diligence to make sure that the companies are who they say they are, and that they are actual genuine real estate entities. What is the difference between a security token and a utility token? So quite a big difference, really. So utility tokens can be used to power a network. A security token is something that is actually a security. And there's been a lot of talk, you might have been following this, about what is a security, how does the SEC define it? They use something called a Howey test. Is it an investment? There are a few prongs to that. Is it an investment of money in a shared enterprise with the expectation of profit? And of course, most real estate investments are like that. You put money in because you want to make some money, and somebody else is going to build the house and sell it, or whatever it is. There's other specific rules around security tokens as well. Everyone has to be KYC'd. Everyone has to go through AML. They cannot be freely transferred. That's why we have something like RealEstate.Exchange and Texture's ATS, which is creating a marketplace for people to buy and sell these securities. And there's other types of restrictions that we also want to put in kind of whitelisting to make sure that everyone who wants to buy one on the platform has been KYC'd and approved to trade by Texture. Looking at a question here, it's from someone called John. How are you solving the liquidity in the secondary marketplace? Well, initially we are going to be matching natural buyers and sellers. So they're not going to be market makers on day one, although that's something we do intend to get to down the road. So initially, if somebody wants to sell, they'll put an order in. We only accept limit orders. They'll sell, let's say, at $10. And if somebody wants to buy that, they can come in and buy it, and we'll facilitate the settlement of that trade there. Let's see if we've got any other questions here. Richard said the ATS is just for trading in the US. So that's someone else can answer that. Here we go. Richard, can you talk about compliance in the SEC? Sure. So there are rules around secondary trading, like, as there's securities, there's security regulations. And there's a lot of it kind of depends on how a security was offered. So if a security is offered through Reg D, which is how it was originally sold. So Reg D is an exemption to registration. Registration basically means you've done an IPO. If you don't want to do an IPO because it's expensive and you generally have to be a much larger company, you leverage an exemption. Reg D is a very popular one for real estate. You can raise through 506C an unlimited amount of capital from retail investors. However, there is a 1-year holding period on that under something called Rule 144. That means you cannot enable secondary trading for a year. There is actually another rule called Section 4A7, which permits secondary trading between other accredited investors after 3 months. but the issuer has to make different types of information public, like financials and so forth, so they can make educated decisions. There's another regulation called Reg.A. If you offer securities through Reg.A, and we are actually doing here at Texture a lot of Reg.A offerings, you can raise, first of all, you can raise up to $75 million per year for a real estate fund, or maybe some series LLCs or something. You can bring in retail investors, so it's not just for accredited investors. There is no holding period, so it can be literally be liquid and trading potentially on day 2 after issuance. And the final one maybe to mention here is regulation CF, which some real estate issuers can use also. That's for crowdfunding. You can raise up to $5 million in 1 year. There is a 1-year holding period on Reg CF also. So if you're looking for liquidity, Reg A could be the best option, but it is a little bit more intensive process than a Reg D, because you do have to get what's called qualified by the SEC. Okay, I'm going to go through some of my other questions here that I have in advance.
Just Richard, just real quick, on Laura's question about what if someone wants to trade with another person that's outside the US. It is possible for an investor outside the US to join a US ATS, right?
Yes, that's correct. We have to be conscious of certain rules, so not somebody from Iran or North Korea. So that's what part of the checks we do, and we need to be aware of any particular regulations in their home country. But generally speaking, that is acceptable, and we have a number of international investors on our platform.
Got it. Thanks.
I see a question here about AMMs, which I was going to actually was preparing to answer anyway. It's kind of, can you trade security tokens on Uniswap or one of these other types of DeFi dexes, as it were? Well, the answer is no, because as I mentioned earlier, to trade securities, you need to be a broker dealer through an ATS that's registered with the SEC. So in working with Gabriel and Martin and Klaus and the team, we had to take the DEX structure, which I think we all appreciate the value there, and make that conform with the rules of an ATS. And as I mentioned earlier, there's no market makers. I don't know if we'll get automated market makers, but we hope to have market makers at some point on RE.X. I see a question here from my friend Tyler. Following up on liquidity for selling the secondary market, where do you see natural buyers coming from? Well, I think, that's something that I think, DigiShares and Texture are going to be working on. We're going to be doing a lot of marketing around this, bringing people to this marketplace. The goal here, of course, is to create concentrated liquidity. Part of the problem with secondary trading of private real estate markets so far is that nobody knows who owns the shares or who's selling or what. There is no real marketplace for that. So what you're doing when you're creating a market, you're bringing these buyers and sellers together. So we're starting off, and DigiShares has done a great, I don't know the stats on how many clients they have, but I know they've got a number of different clients lined up, and we'll be launching, hopefully with a number of different tokens, and bringing in other folks who weren't able to participate in the initial offering. They may have an opportunity to participate in the secondary market. Shout out if you see any other questions there, Gabriel. And what do I see here? I think those were the main questions I had. Is there anything else that I need to be addressing from these from this chat here?
Let's see, because there's a lot of. Thank you to everyone for asking so many questions. So it's hard to process.
While Gabriel looks at that, I did see something here. So RealEstate.Exchange is primarily about the secondary trading. I know that DigiShares can facilitate primary trading through their platform as well. So if you're not ready for that, if you're still doing a capital raise and you want to raise money for your real estate project, you can still reach out to Gabriel and Texture, and we may be able to help you there as well. And then down the road, those securities will be able to trade on RE.X.
Absolutely. Let's see if so someone is asking how much capital have we raised on the platform? Yeah, so it's important to understand that RealEstate.Exchange is focused on the secondary trading. So it's a tool to enable existing investors to trade with other new investors that could potentially come in, but it's not a primary issuance transaction.
I see a question here. So the token is backed by real assets, but how is the valuation happening? Well, I think
that's a good question.
That is a good question. So Texture is not providing any kind of independent valuation on these types of securities, but what we are going to do, what we're going to do with DigiShares, is work with the issuers to make sure they're providing the right information so that investors can make the right decisions. For example, what is the rent coming in on these properties, or what is the dividend being paid? Letting you know what markets they're in, what is their strategy, is it commercial, is it residential, and so forth. So we'll be looking to provide as much of that information as possible so that you can make the right decision. However, I also have to say here, these are private securities. They're not without risk. This is the disclaimer section. They're not without risk, and everyone should do their own research or consult with financial advisors before making an investment.
Absolutely. And when is this going live? Soft launch is planned for Q4, and hopefully the real launch shortly thereafter. So it's coming up in the next few months. Is there any rating on the token to help the secondary market? I mean, I guess issuers could upload some sort of independent report on their issuance. I don't know if you've seen anything like that, Richard, previously.
No, I think I kind of go back to my last question there. There's not going to be ratings at this point. I think, as we grow, I think there's a lot of opportunities for putting some kind of valuation or rating in a decentralized way. We're always looking to explore, how can we further leverage DeFi in the more traditional security space, which is exactly what RE.X is. I see another question here. Will the tokens be represent new buildings or empty plots, or is it up to real estate company linked to the platform? It's all going to depend on what comes to market. It could be an existing. This is actually a good point. In fact, here, if there are any issuers on the call right now who have properties, who have real estate, they're not raising capital, but some of their investors maybe want some liquidity. We can work together with Gabriel and his team to bring that onto the platform and we'll issue tokens for them as the capital was previously raised potentially over a year ago. The holding period would have passed, so they can become tradable. Pretty much as soon as you list it. So that's another good advantage there.
And Wallace added to the previous debate, you can ask the issuer to create a data room to include appraisals and audits. That seems like information, that would be available to investors as they're investing, and then that would update the investors as trading is live. So definitely. All right. Well, I think that's pretty much it for now. Thank you so much, Richard. Do you have anything else to add, or any other question that you saw that you'd like to answer?
No, I'm happy to. Feel free to reach out to me on LinkedIn or via email. Happy to answer any other questions.
All right. Thank you, Richard. Next speaker, Maurice Crespi from South Africa. He's RealEstate.Exchange's legal partner, compliance partner down in South Africa, founder of Schindler's Attorneys. Maurice, the floor is yours.
Great, thanks so much, and thanks to the attendees. I'm an attorney. I've been a commercial attorney for the last 25 years, got into blockchain and real-world asset tokenization with DigiShares about 3 years ago. What we've done is we focused on the regulations and compliance, not only in South Africa, but Africa and around the world. And we've partnered with DigiShares as a primary issuer. We do the primary issuances on Schindler's X.io, we take clients through the process, and a lot of the questions that are being asked are actually answered on our website, RealEstate.X.io. And the idea is, as a primary issuance, as you come through us, we do the due diligence, the questions around feasibility, feasibility reports, how do we know that the value is right, that kind of stuff. We've partnered with CBRE. I think they're the biggest in the world when it comes to property. They've partnered with us. They do the feasibility studies. As an example, we're busy with a project in Tanzania. It's a tented camp, looking at the camp being run by the Marriott. And we've worked with CBRE to provide the feasibility study. We then do the due diligence, and we work with the project owner throughout the whole process, which also includes the structuring, the creation of the SPVs, how it works, advising on tax, and the like. And the idea is, once there has been issuance, to allow our clients to list on the real estate exchange as a secondary exchange. And yeah, quite exciting. We actually, when it comes to RealEstate.Exchange, we have applied to the Financial Service Conduct Authority in South Africa, so that the exchange is licensed in South Africa. They attended our premises for an 8-hour inspection about 2 weeks ago. It went really, really well. So obviously we're very, very excited on our side to take this forward and to actually work with DigiShares. So from an African perspective, fully compliant. The structuring is important. I mean, legal advice and legal considerations, I think, are essential when it comes to the tokenization of real estate. But we've got a whole host of projects, and they are going well. They take longer than expected. We thought that a project owner would come to us and we'd be ready in about 3 months, but there's actually a lot more to it, particularly when it comes to the putting together the prospectus, as we call it, so the prospectus or white paper, which is coupled then with the feasibility studies, and then discussing the tokenomics and the secondary market. And we also encourage our own clients to consider being market makers. So what we're looking at doing is actually having our clients, when it comes to listing on the real estate exchange, to actually market make themselves, and the whole host of models that we put together that actually allow for that. And it's very, very appealing to the project owner, because it's it provides liquidity, but it also provides further opportunities for the project owner. So from our perspective, the journey has been about 3 years. It's been pretty long, but we're ready, and we've got a whole host of clients ready to list on Real Estate Exchange, and we can't wait. So let's just see if there are any questions that I can answer. Well, is it possible to list a property outside of the US? Absolutely. I mean, that's exactly what we're doing. The idea is to look at Africa and to take it through Africa. We've got correspondents throughout Africa, but we do locally, and we can do primary issuances in relation to foreign assets with a view to then listing them on Real Estate Exchange.
And yeah, just a general answer on that as well. It's you can have a legal entity in a jurisdiction that owns a real estate asset in a different jurisdiction, and tokenize and list that way.
Certainly.
Trying to see if there are other questions for you, Maurice.
Will the tokens represent new buildings, empty plots, or existing properties? Was that really up to the real estate company? The way it works is the project owner comes to us with an idea. So I'll give you a project that we're working on. It's quite a large project. It involves the rejuvenation and the acquisition of about 2,000 apartments in the Johannesburg CBD. And that's over there it's tied in with government funding, government grants, and the like. And the idea, we've been working with them, the project owner, for about since about January. No, in fact, December last year. And we're putting it together. It's not only the tokenization is only a portion of the funding. There's also debt, and we're working with the banks on the debt, and that's in relation to apartments. Then what we've also have are developers who come along and they negotiate a land use agreement with a landowner. They work together, and the idea is to do the capital raise. And we do that. It's got to be like marketing. It's not as though the investors are just going to come along. So what we do is we act with financial service providers, with a network of family offices around the globe. In fact, if you go to schindlers.com, you'll see that we have a presence in many, many jurisdictions around the world. And yeah, the idea is to leverage that network with a view to the primary issuance and then taking it onto DigiShares, well, onto the real estate exchange.
Yeah, so it's really up to the issuer to decide what they want to tokenize. And what we've heard from real estate developers is actually the longer the time horizon, the higher the need for liquidity optionality. So if you're thinking of a ground up development that hasn't even, where the construction hasn't even started yet, well, if you're coming in as an investor, your time horizon for exit is at least 5 years, and so the need for liquidity optionality becomes higher than if you've been an investor for 5 years already. So that's something to think about.
Craig's asked a good question here. Where would we stand if a project failed to complete? When it comes to development projects, I think it's very, very important that escrow arrangements be put in place to protect the investors. So what we do is we also act as escrow agent in 2 respects. First, when it comes to primary issuance, we'll only obviously release the funds to the project owner if there's a successful raise. If there isn't a successful raise, we as escrow agent make sure that the initial investors are refunded in full. Then when it comes to projects such as developments, once there is a successful raise, the escrow agreement, which will be published and will be part of the due diligence pack, will set the milestones for the release of the tranches to the developer once the milestones are hit. So we control the process very, very closely. Throughout the process, we have what we term an integrity officer, who the investor can phone, can get updates from an attorney at Schindler's to find out what's going on. So there's always the ability to, I mean, it's better than a help desk. You actually speak to an attorney and you can get the information. And the persons that are responsible for overseeing the project are both regulated by the FSCA, the Financial Service Conduct Authority, and the Law Society. So we double regulated when it comes to ensuring that there is compliance and that the escrow terms are met. But the escrow agreement is very, very important. The disclosure of the escrow agreement is important to the investor because it's something that they must take into account.
Thank you. So yeah, if there's no other questions specific.
The platform is 100% real estate. On our side as a primary issuance, we do everything, but all our real estate will be going onto RealEstate.Exchange. Subject to, obviously, I think, Gabriel, there will be certain criteria on your side, and I'm sure Richard will be quite strict when it comes to it, but those criteria will be met. And from our side, we'll make sure that the checklists, all the boxes are ticked to ensure that it can be listed on the RealEstate.Exchange.
Yeah, I guess we have another question too. Do you have to tokenize all the shares of a company owning the real estate, or can you tokenize a fraction? You can definitely tokenize a fraction. You can even create like different share classes, some that could be tokenized or not. I don't know if you have anything to add, Maurice, but
most of our big projects actually are debt and equity, and we work with the banks, and it's the equity portion that we generally look at when it comes to these raises. So absolutely, it's whatever is required, and every single project's different. We haven't come across a project that is the same. The requirements are unique. So there was also a question in relation to the timeline. On the timeline, as I said, it's been taking longer than expected, but it's generally the due diligence process, the feasibility studies, the marketing and that kind of stuff that takes long. When it comes to the actual listing on the exchange, that's relatively quick.
So maybe we could say a few weeks.
A few weeks. It's generally up to the client. I find that it's normally
Yeah, that's right.
owner. It's the project owner. So when the project owner comes to us, we say, okay, well, we have to go out and you need to get this information and you need X, Y, and Z. And that's where the delay comes. When they come to us with the information, we have a 24-hour turnaround time. So we're very quick on our side. So the delays are, if not always, occasioned by the project owner.
Yeah, and I think Richard would probably say the same thing. In the US, it depends on how ready the issuer is.
Who has access to the escrow funding.
Right.
So we're attorneys. The money is held in trust. Our professional indemnity insurance covers it. As I said, we're double regulated by the Financial Service Conduct Authority. We've received our license. The other license I made mention of is for the RealEstate.Exchange. Yeah, as attorneys handle trust funds, we do the same in terms of escrow arrangements. And incidentally, we do have 2 signatories. So 2 equity partners have to sign it off. One partner doesn't have the ability in any of our banking to be able to sign off. And the same applies to crypto receipts. We use Safe, multi-sig wallet with that requires 2 signatories at Schindler's.
So there's some questions that I'm seeing that I'm saving for after, maybe with Klaus. Yeah, I think we've gone through the relevant questions for you.
Last one I'll answer. Once you tokenize the project, how would you raise additional equity, i.e. expansion? We always look at that up front. So what will the requirement be after several years? And it can get quite interesting because, you can look at the original token holders having the first right of refusal when it comes to the secondary tokens, when there's an additional capital raise and that kind of stuff that can be considered. But you can have multiple raises along the way in relation to one project or the expansion of an existing project.
Yeah, and hopefully people would use the DigiShares platform for the capital raising or the onboarding of investors and cap table management and all that. But yeah, on that front, it's important to realize that you also need to work with capital raising experts. If you don't have an existing network of investors, it's not because something is tokenized that you immediately find all these investors. You could work with broker dealers, for example, or digital marketing firms if you're doing more of a crowdfunding type of offering. So there are different strategies on that front. All right, thank you, Paul. That was a good question. Yeah, anything else, Maurice? Or
that's it from my side.
All right.
Else? Yeah, thanks so much.
Thank you so much. Thanks for joining.
Thank you.
All right. Next speaker is Klaus, CEO of DigiShares and RealEstate.Exchange. And so he's going to talk a bit about the launch and the plans with a focus on the UAE. So Klaus, the floor is yours.
Thank you very much. Do you see my presentation?
Yeah.
Yeah, no, it's a pleasure to have so many distinguished speakers here today, and I'm happy to represent the UAE part of the exchange myself. But first, a little bit about liquidity, right? So we see 3 main issues that are keeping the tokenization space back from developing at this stage. One is sort of regulatory and legal issues globally, right? Prices are high, and in many countries it's difficult to tokenize. You may need a license, or in fact, regulation doesn't even support it. In Sweden, for instance, you need to work with a CSD for any kind of private tokenized share sale. In some countries, you need to notarize trades and so on. So in some countries, it's impossible to tokenize. In other countries, it's close to impossible because you need to have a license. So that's sort of one hindrance, I would say, for the tokenization space to fully develop. Another one is the quality and the level sort of on-ramp and off-ramp and wallet adoption and so on globally. which is still not at a stage where it's extremely user-friendly for most people to use it, but it's developing extremely fast, I would say, and it's becoming so easy to use wallets. Wallets are getting adopted by banks and larger companies and so on. So it's becoming much easier as we speak. The last main issue is, of course, liquidity, right? So the buy side is not sufficiently developed for the tokenization space, and that's why we decided to launch RealEstate.Exchange. We believe that liquidity is longer term sort of the most important aspect and value driver of tokenization itself, and what will really sort of provide the full value of tokenization. So of course, the way that the blockchain industry is launching liquidity is it's about reducing cost, it's about increasing efficiency, increasing in transparency and so on, and also security. So we believe that what we are providing is better quality, higher quality technology. It's just better than what we have today. It's more secure, it's more trustworthy, it's more transparent. It's also much more efficient and much less costly. And we are following the same sort of vision, I would say, in the development of RealEstate.Exchange and keeping prices low so that it's available for anyone, or at least more people than can access it today. We also decided to focus on a single asset class, real estate, to make it easier to develop a buy side and reach critical mass for that specific vertical. Of course, if you make an asset liquid and tradable, it becomes worth more. That's because the difficulty of selling the asset is priced in. So if it's illiquid, it will have a lower price. But if it becomes liquid, it will then get a higher price. This is called the illiquidity premium. Institutional investors also prefer liquid assets. So if we make real estate into a liquid asset class, institutional money will flow into in an increased amount. It will allow people to diversify and not just invest in one or two properties, which is the case for many people today, but rather diversify across a long range of real estate assets in different countries and different types and so on. And of course, we will give access to retail investors in all of the exchanges, also in the US, global access for investors to participate and trade, sort of to enable the democratization that I think is one of the underlying visions of the blockchain industry. Making assets liquid is also a necessity for lending. So we're speaking to lending providers, and that will sort of be the second step. So once we have made assets more liquid, they can also be used as collateral in the DeFi lending ecosystem. And I think this is going to be the second revolution that we will see in the next few years. And also, of course, once we have made individual real estate assets liquid and tradable, the stage is ready for derivatives and tokenized REITs to become possible. So that will be the next step as well. So as you have seen, we are launching different versions of the exchange in different countries across the world. The US launch is imminent in collaboration with Texture Capital, Richard. This will be in Q4. Now it seems October, November, most likely, and we are looking for assets to list on the US exchange. So reach out to us if you're interested in discussing this, and we'll have a discussion. South Africa, I believe, will be the next version. This will be an AMM version with liquidity pools that we are working on developing together with Balancer and Polygon. And hopefully in the first half of 2025. The next one then will be the UAE one, where we have to apply for a license and go through the licensing process with VARA, the local sort of virtual asset regulator. Hopefully being ready to launch in the second half of 2025. And then probably last, but not necessarily least, the European Union version that will have to be it'll have to wait until we are through the European Union blockchain sandbox process, with the goal of sort of investigating and mapping out the licensing framework that is necessary to run an AMM with liquidity pools within the European Union regulatory framework. So regarding the UAE, of course, it is a very dynamic real estate market. In fact, the UAE is pretty much all about real estate property. It drives a lot of the local economy, and the government, the land department there, the securities regulators, VARA, ADDM, and so on, are all pushing for tokenization to become reality. They are giving out licenses, they are developing regulation for it, and they are sort of inviting companies like DD to participate in the development of this new industry. It's also a large real estate market with 1.3 trillion US dollars in AUM, and it's of course a region that is very interested in new technology. They want to make real estate into a liquid asset class. The land department is particularly interested in this and sort of making it easier for them to integrate, collect data about tokenized properties and so on, and get better control of the asset class. So so we are setting up a UAE entity as we speak. We are working with VAR, the virtual asset regulator, to obtain the suitable licenses to run an AMM. Right now, we believe that we need that with a sort of a broker-dealer license in Dubai, we should be able to run the AMM exchange. Finally here, before I end, we are doing a number of other events also that you could be interested in. Tomorrow, we are running a similar webinar on tokenization in North America. October the 10th, I'll be in Dubai doing a masterclass at the World Token Summit. October 16th, we'll be doing a webinar on tokenization on different chains. We support 5 or 6 chains at this stage. And November 13, we'll be doing a similar webinar on European tokenization. So that's it for me. Thank you very much.
Thank you, Klaus. We have a few questions in the Q&A. So is the platform 100% focused on real estate, or can this be applied to other physical or non-physical real assets?
Yeah, it is 100% focused on real estate to begin with, but it can be any kind of real estate. It can also be any kind of security that is tokenized to represent beneficial or ownership rights. That's what we are starting with, and the goal is really to create critical mass around one vertical. Once we have launched the RealEstate.Exchange and it's running in a good way, it's relatively easy for us to approach other asset classes, and we haven't decided whether we'll do it, but I think it's likely.
All right, and we have a follow-up question from John about creating the liquidity and like how do we do it? So that's a really good question, and probably need hours to answer, but you know, maybe I'll just tee it up for you, Klaus. I think there are two main aspects to think of. There's the technological infrastructure that enables potential liquidity, and then there's actually creating the demand to bring market participants in, and even, you know, market makers in. And so right now we're building the technological infrastructure. And we're gonna, you know, launch Q4 this year, and simultaneously our focus is bringing as many people to the marketplace as possible, but that's going to take time, of course, to reach a point where there's in effect a ton of liquidity on the market. And I think one key thing is getting high quality assets listed. And so, you know, if you have a high quality real estate asset, please come and join us, and let's do this together. I don't know if you have anything to add, Klaus.
Oh, I think that's quite right. I think it comes down to marketing, I think, and getting enough traders and investors on the platform. And we are working on the marketing plan to be able to deliver on that, I would say. And then I think the second step will be market makers and liquidity providers. And of course, it's a chicken and egg situation, right? So of course, we also need extremely high quality assets listed, some really good stuff on the shelf that people will be interested to invest in.
That's right. And I think also another component which you touched upon, Klaus, is having this real estate focus, so that the people's attention is not too diluted across, you know, too many platforms, and if you launch a platform, it's not clear what's really trading on there. Here, like, we're people that are interested in investing in real estate on chain, they'll be driven to RE.X, hopefully. So right, so I think there was another question. Oh yeah, maybe we slightly answered this with Maurice, but what's the approximate timeline for the entire process from when an owner is ready to tokenize and list real estate to trading on the exchange to completion of sale? So yeah, I guess there's a due diligence process with either Texture in the US or Schindler's in South Africa. That takes a few weeks. It depends on the issuer. Then trading, that can, once the due diligence phase is complete, that the trading can happen just a few days after that, if the securities are seasoned. So that means the lockup period is ended. So in the US, there's a 1-year lockup period. So you have to make sure the initial investors have owned the securities for a year, but then it can trade immediately. And then completion of sale, that's a big question mark. There's never a guarantee that you're going to be able to sell your tokens at the price that you want to. It's the market will, you have to find a buyer at the price that you're proposing. So yeah, I don't know if you have anything else.
Can I just jump in there?
Yeah, please. Great.
Important that what we found is project owners are coming to us, and we're actually finding legacy either family offices or institutional investors coming in. And what appeals to them is they're taking up the entire project. So it's one investor takes up the project, but they're doing so mindful of the fact that they will be able to exit through the tokenization process, through the real estate type exchange. So we've actually had 2 projects now sell off pretty quickly because there's been a single investor. And I think it's important to note that that would be the idea, is to raise the capital whichever way possible, with whoever's out there, obviously within the confines of regulation. And what's attractive to those investors is the fact that we know about tokenization. We have the ability to create that liquidity by taking the shares of that single investor, should they need it, should they see liquidity in the market, and then they put it on the real estate exchange. And we're seeing that now.
That's a really good point. Thanks.
I was going to jump in and add on that. You make a good point there, Maurice. But the other thing is that if an issuer is doing a primary offering, if they, we've heard feedback saying, I want to tell people there's going to be a secondary market afterwards, because that makes it easier for people to dip their toe in, knowing there's going to be potential liquidity, as opposed to, I'm going to lock my money up for 5 years, 6 years here. I got kids going to college or whatever it is. So, some issuers who are forward thinking like to put that into their initial offering documents.
Well, what's in our business model actually allows for legacy paper, so normal contractual paper that financial markets have been dealing with for decades now. We issue that, and we say to the investors, if at any time you actually want to put that paper, those share certificates, that equity on an exchange, we'll do that as part of the transaction.
Yeah, these are great points. So tokenization doesn't itself help you find the investors, but it helps you convince the investors, in the sense that you're reducing their risk by offering them the ability to trade on a secondary market after. So that's quite powerful. Can we, now that you're here, Richard, there's a question that just came in. Can we use RealEstate on the real estate exchange?
Well, RealEstate is a primary offering.
Right.
So and RealEstate.Exchange is for secondary trading. So no, you couldn't do RegCF on the exchange. You could potentially do it through the DigiShares platform. I don't know if you've upgraded for RegCF yet, but the securities that are issued under RegCF can be traded on RealEstate.Exchange, with the caveat that there is a 1-year holding period, unless you are trading it, selling the securities to an accredited investor. So we can build these rules into the smart contract so that the liquidity that's available on the exchange is only being permitted to trade with an accredited investor in that first year.
Yeah, so if your XCF is done, you have your investors, you can totally list on RE.X once the first year has lapsed for sure. And then with regards to doing a primary issuance, again, RE.X is focused on secondary trading. And on the DigiShare side, we're looking to add that functionality, let's say, first half of next year, so that you can do a REXCF primary issuance. Just there's more compliance burden compared to Reg D and Reg S. So great. Just trying to see. Hamza, who's asking a follow-up question on you can regulate in one jurisdiction that owns a property and trade in another. So I guess what we were saying is you can, let's say you have an asset in Mexico, you can create a US legal entity that owns that asset and maybe some other assets, and then list that on RealEstate.Exchange. That's all that we meant. And obviously check with your local regulations always. It's important to have a legal advisor in your corner, and we can introduce you to some. So, all right, we have new questions coming in. If RE.X was to become insolvent, what happens to existing token holders? That's a really good question. Klaus, yeah, please, Maurice, yeah, please. Yeah.
So the difference between cryptocurrency, it's a question I'm asked often. The difference between a cryptocurrency and a real world asset token is a cryptocurrency is a store of value. If you lose the token's gone. If you forget your password, the token's gone. It's like a dollar bill. You lose the dollar bill, it's gone. These tokens are representations of value. They're like share certificates. If the share certificate's lost, you can get a replacement share certificate. And it's actually a service that we've built in to ensure that if there is a breach, if there's a security breach, if there's a liquidation, the underlying legal relationship remains intact regardless of what happens to the exchange. So investors are safe. Never ever compare this to the cryptocurrency world, because it's very, very, very different.
Absolutely.
So tokens are independent from RE.X, right? So even if RE.X goes down or something happens with RE.X, the tokens are still owned by the original owners. Nothing will change that. And if the wallet or the system somehow becomes inaccessible, the tokens can be burned and reminted, reissued to the correct owners.
Yeah, so investors will have, and the issuers will have their own self-custodial wallets. So that's the big difference between Web3 and the traditional financial system is, well, or at least there's some within Web3 that have still built centralized systems, and that didn't end well in the case of FTX and others. But here it's really, there's more of a decentralized component in the sense that investors and issuers have their own self-custodial wallets, as opposed to a centralized wallet on a platform or an exchange. So only the investor and the issuers control the keys to the wallet. All right, so if someone was primary listed via a different platform, can it secondary trade on RealEstate.Exchange? That's a really good question. Klaus, would you like to take it?
It's a technical question, right? So we plan to make that possible as soon as we can. We are starting with ESE 1404, which is an open standard that is used by many companies, many issuance platforms, right? So if they use that, then it's relatively easy for us to list it. If they use any other kind of protocol, then of course we will have to integrate it. But it's definitely on the roadmap to support the most common protocols out there.
Got it. If I list my real estate in this platform, how is the legal situation of ownership? If the owner died, how is the ownership then? I mean, I guess the answer would be, whether the issuance is tokenized or not. I mean, it'll be the same like succession process. I don't think the tokenization aspect changes. changes anything.
It would be the same as a deceased having listed shares in their estate, to be treated exactly the same way.
Yeah. And Eric, on institutional adoption, when will it happen? What is needed? We're seeing it happen. I mean, you know, BlackRock has tokenized a fund. You know, all of the so, you know, Hamilton Lane, KKR, some big names. And yeah, so it's, you know, they're slowly entering the space. And what is needed, I guess, continued work on the actual tech infrastructure and drawing more investors to the market. So I don't know if anyone has anything to add. Yep.
Larry Fink of BlackRock, I mean, they've got now tokenized funds, but he said that he predicts that every asset in the world will be tokenized by the end of the decade.
Yeah.
I mean, that's that serious prediction.
Yeah, and he's they're also involved in the, I believe, the Texan stock exchange project, which is rumored to maybe have a tokenization component as well. So it'll be really interesting to see what they do with that as a competitor to the New York Stock Exchange and NASDAQ. So to be followed closely. All right, let's go to our next speaker. Thank you, everyone. We have Shah Karim, who's joining and who has some US tokenized real estate that's going to be listed on RE.X. And yeah, Shah Karim is the founder of a Landlord Token. The floor is yours.
Thank you, Gabriel. I'm just going to share my screen.
Yeah. Great, we can see it.
You can see it? Fantastic. Okay, so good morning, sorry, good afternoon, good morning, or good evening, wherever you're all located. Thank you, Klaus and DigiShares, for inviting me onto this fantastic webinar. My name is Shah Karim, and I'm from Landlord Token, which is a real estate tokenization platform focusing on US income-producing real estate. Just one moment with my screen. Our mission is to bridge the gap between global buyers and US real estate, where they can purchase income-producing real estate in the United States. So whether you're from Toronto or Tokyo, anyone can become a US landlord for a $50 token on our blockchain platform. So just a brief background about me. I am originally from England. As a real estate investment and asset manager, I operate exclusively in the United States market. I started my legal career in the UK after completing an LLB from the University of Leicester and then my Masters of Laws from the University of Birmingham. I then studied international law in New York, and that's where my US journey began. I started in New York, pivoted to real estate opportunities in Florida, and then Illinois, Ohio, and Michigan. I have over 20 years of experience of real estate and US business experience. I've also lived in Australia for 2 years, developing the investment process for Australians investing in the US real estate market. And I've also worked with investors from Canada, the UAE, the UK, Ireland, France, Kuwait, Turkey, and Singapore. So over the years, I found many people are interested in participating in the US real estate market. However, there are many obstacles, such as the cost of entry, as the average US house price is $250,000, even in the most affordable states, and closing costs, raising mortgages, fees, etc., add significantly to that. Also, if you're an overseas investor, researching the vast US market and various investment property types within them is pretty daunting. Physical visits to multiple locations, multiple states, multiple cities, different parts of the country, again, become very, very expensive if you are just looking for 1 or 2 investment properties in the USA. And even if you do find a suitable property, understanding the local market in a short visit is extremely difficult. Things do change dramatically in different cities based on zip codes, locations, counties, and so forth. So you really need to kind of have a pulse on the local area to understand the rental potential, the development potential, and so forth. And most importantly, and this is probably the most difficult aspect for overseas investors, is buying a property and then relying on a property manager to generate a profitable rental income for you and make that investment profitable. So these are the key issues facing overseas investors buying in the USA. However, tokenization has changed all of that. So this is our tokenized solution. I looked into tokenization 3 years ago and found it was a minefield until I came across a DigiShares event and traveled to California back in October 2022 to meet Klaus and Gabriel. I found that a white label solution to tokenize our real estate projects would be a perfect match for us expanding our offerings to a global audience using blockchain technology. So for us, the solution was crystal clear: a transparent, efficient, and user-friendly interface using smart contracts for a global audience buying US real estate. So this led us to develop landlordtoken.com, which is where any overseas investors can purchase tokens for income-producing real estate in the USA for as low as $50 and receive regular rental payments. So with the help of DigiShares, we streamlined our tokenization process into 5 easy steps. And now we're very excited by RealEstate.Exchange, which will provide liquidity for offerings. And that's step 4, which is a natural progression within our investment and tokenization cycle. One thing to bear in mind with tokenization is it's a huge untapped market. According to the Boston Consulting Group, this market could reach $1 trillion in 2030. And within the US, that market stated to be currently $3.2 billion. Our platform will focus on 3 specific states: New York, Michigan, Illinois, Florida, and Ohio. And that will be the market and the real estate that we'll be looking to put onto the real estate exchange. The property types we specialize in are duplexes, mixed-use properties, and apartment buildings, and also occasionally specific single-family houses based on their value or their rental income. So I'm just going to show you 4 examples of properties that we are looking at. For example, this is a typical apartment building within Michigan, a 12-unit apartment building in Illinois, and also single-family house in New York, and a duplex property in Ohio. So the question is, how do we select properties for tokenization? Well, we have a strict criteria for the properties we tokenize. We focus on selecting income-producing real estate of various types. As I mentioned, that's apartment buildings, duplexes, mixed-use properties, and occasionally single-family houses. What we do is that we focus on mid-market cities, which have a significant and rising middle-income renter population. Also, cities that have a decline of home ownership. By doing that, we focus on an area where, during the medium term, we could increase rents, we could have a steady pool of tenants coming in, and also areas that could see some sort of regeneration further down the line. the individual properties that we focus on are properties where we could add value. And these could be underperforming properties or distressed properties. And when I mean distressed properties, we're talking about financial distressed properties or physically distressed properties. What we do is with these properties is that we turn them around, and then we allow the building to create a steady rental income for us and for our token holders. We specialize in certain states, which I mentioned, and that's because we have a strong team presence within these specific states. We have established networks to allow us to obtain properties off market as well as on market. We have robust property management. We're familiar with the rental laws within those specific states. And we also have a construction team within that state or in a nearby state that could work on properties that we acquire. By having all of that, it allows us to manage the property strategically. And that's one of our key strengths. One of the prime reasons that we're different and why Landlord Token is we are primarily, and we are first and foremost, a real estate company. Our strengths are in real estate asset management, property selection, tenant management, and construction. We are using tokenization to bring US in real estate to a global audience. Currently, we are filing a Reg D with the Securities and Exchange Commission. We are Regulation S compliant. We have a great onboarding system provided by DigiShares. We are seasoned asset managers and property managers, and we are able to acquire profitable rental real estate assets. We are US based, and we facilitate token holders from all over the world. So this is me. I thank you all for listening to me, and I hope you found my presentation useful. Here are my contact details, and if anybody has any questions, please feel free to contact me.
Thank you, Shah. We actually have two questions. One from Laura. What SEC exemption are you offering these investments under for $50?
So that would be under Regulation D and Regulation S.
Perfect. Very clear. How large is your portfolio now by Wallace?
So at the moment, we are tokenizing our first large pool of assets. Our previous deal have been through private placement real estate partnerships. So we've moved away from that into tokenizing our portfolio. But that would depend on the portfolios that we put onto the real estate exchange and the ones that we're developing for token holders at the moment.
So a legal question, how are you managing Rule 12G with $50 investments using Reg D? I think I know what that refers to, but do you have an answer to that?
No, I don't.
So I believe it refers to the limit in the number of investors. And the way you would manage that is by working with a broker dealer, where if such as Texture, where the investors would be sitting under the broker dealer, but we can get back to you with a more precise answer. This is just from my very limited knowledge of legal and compliance aspects, but thank you, Laura. So how does Landlord Token make money?
So we always have a share of the tokens, and we effectively tokenize the vast majority of the total units that we offer. We take a percentage of that. So as long as our token holders are making money, we also make money, and that would be from the rental income, that would be from the appreciation, that'd be from development profits, and so forth.
How do you handle tax returns?
So the questions of tax returns, I think that would really depend on the actual individual tax status of the individual and where they're located. So I think it would be prudent to say that they would have to look at their own tax returns or the tax policies in their own country if they're investing outside of the United States. So if they're from outside of the United States. Within the United States, we pretty much file standard federal taxes and state taxes as and when they're due.
Right, and maybe a last question because we have to move to our last speaker. Are you tokenizing each and every property individually or the real estate investment fund?
Individually. So the investors would be able to select a real estate type. They'll be able to understand whether they want to buy into an apartment building, a single family house, a duplex, whether that's in New York, Michigan, Ohio, Chicago, Illinois. They have the choice, and that's what we actually purport to do. We pretty much would like individuals to have a choice in the individual properties that they're investing in individual states. And of course, as things develop, and if they're looking to invest further, then they can invest in the same state in a different type of property class. And it just gives people choice. I mean, what we're trying to do is just connect the global audience that may not have $250,000 or $500 or $500,000 to buy US property and spread that across into different property classes in different states.
Great, thank you so much, Shah. There are two more questions, but I'll let you just answer in writing in the Q&A section because we do have to move to our last speaker. So thank you, Shah.
Yeah, you're very welcome, grateful.
So our last speaker is Brian Elders of Black Manta Capital, their tokenization service consultancy, and they're partnering with RE.X, helping list US assets. So Brian, the floor is yours.
Thank you very much, and thanks to DigiShares for this webinar. It's actually exciting to be working on all of this. It's new, it's transformational, and we're at the beginning of a process that I think everybody, no matter what statistic that you or whatever expert that you consult, we're at the very beginning of a rapidly growing market. So I have a few slides. I'll share them. I'll run through them quickly, and then I'll stop and we can have a general discussion. I'm the last speaker, and we can ask questions of everybody. So let me just share. Oh, okay, I'll stop sharing. Share better. I will share the 1 second. I'll share the correct thing. Here we go. So let's make this slide. So Black Manta is the company, and you can see in the small print there, it's regulated since 2019. So we were the first in the EU to get regulated as a MiFID institution. So as a financial institution in Germany for financial products on a blockchain. So who am I? I'm managing partner of Black Manta. I'm also, which is MiFID regulated. In that list there, I'm a founder of Source Digital Assets and Fortuna, which are both VASPs in Europe on the way to being CASPs. So we have experience across both we'll call it the crypto asset space and the financial instruments and security space. We also have a wallet, which is a frontier markets and emerging market specialist. Personally, I come from a background, I have a law degree and a business degree. I'm a treasurer and an accountant and a quant, and I worked in investment banking for a number of years in professional services. And I came across blockchain and crypto a number of years ago, and I think it's changing the face of assets around the world, including how we deal with securities and properties. So Black Manta, a little bit about Black Manta. As I say, we're regulated since 2019 in Germany by BaFin and the Bundesbank. We have a number of other aspects to the business where we have either representatives or partners in a number of different countries. I myself am the one that's based in Ireland, and I'm speaking to you from Ireland today. But we have a growing global presence in Asia and in North America. So who are we? We're the first in Europe to be regulated. We consider ourselves a next generation investment bank focused on digital and tokenized assets. So we're a full provider. So we will assist and help clients both to put together the project, the financial, legal aspects of it, and the regulatory pieces. So we will help to bring everything together, and we work with partners like DigiShares to deliver that. So we're tokenization as a service. We've been around for a long time, so we could really fill this page up with heaps more of logos. This is a fast emerging space, and there are many players in this. And I think when we look about what is tokenization and where do we see it going next, we'll see that the size of the market that is there. I know it was mentioned by another speaker, but you can look at many different studies, and it's a very attractive market. So what is packaging? This is where things have come from before. We went from papers to standalone computers to the internet, and now we're in a blockchain space. And this then changes how we can deal with these assets. So we've gone from physical venues to automated services over the internet, and now we're going to self-executing smart contract-based finance. So that's the pathway that we're on, and I think we're making things better, faster, cheaper, safer as we go along that. And the statements that you hear from some of the major financial institutions about everything tokenized, there's a reason for that, and that's because it's assets are better organized that way, in our view. So the regulatory experience. So tokenization in Europe, it depends on what you're talking about, and we have a number of different geographies here. It was interesting to listen to South Africa. It was interesting to listen to the US. Europe is different. It's got its own it's got its own ways of organizing things. MiFID II is what organizes the securities business here. So that's any financial instruments or security tokens. So no matter how it is that you arrange something, if you're a security under MiFID II, you need a MiFID II license in order to deal with it. MiCA or MiCA, that relates to crypto assets and stable coins. Again, there's the benefit in Europe of those being reasonably tightly defined. So you know if you're going to be regulated there. The DLT pilot regime we talked about earlier on, that's for exploring where the two meet and the margins of both. So as a MiFID II regulated institution, we're also allowed to do crypto assets under the new MiCA regime. So all of these things are all coming together in Europe in a way that is different than I think the rest of the world, in that the US, and I don't know about South Africa, but certainly the US lacks, we'll say, some of the rule making that is now clear in Europe. So in Black Manta, we're not a specialist in real estate. We do real estate, but we look across what is happening in the tokenization world, and we see many different verticals, and there's a lot of activity in each of them. Today, we had some statistics earlier on. I won't go into it so much, but all of these things here, it shows just huge markets that are coming through. It's showing that the participants in the market are absolutely interested in it. I would also say, I think it was Morris was saying that it takes a very long time sometimes to work with some of these projects. I would say some of the institutions that we're dealing with, we've been speaking to since 2019, and they're still getting around to their first deal. But they all have teams working on it, and they're all on the way to getting there. So I think we will see slowly but surely the institutional investors arriving. So we're talking about today the RE.X. So you're looking at what is perceived as the advantages, and the improved secondary market liquidity is definitely part of it. Other speakers referred to when you're even arranging at the very start a tokenized security or an offering. Questions from clients invariably and always refer to the secondary market. At the moment, there's little or no secondary markets out there, and there's certainly nothing like RE.X. So it is a very important part of the jigsaw that is coming into play. So real estate, I think I don't need to go through this. We all know about why real estate tokenization is a good idea. It's just a reminder of it. We have done a number of deals in the space. The first deal that we ever did was this one. So this was a German deal, and normally when we have US people on the phone or on the webinar, they're always surprised to hear that we're able to do this, issue these things on a blockchain and sell it retail in Europe. So these things are possible. We have done it. We've done this for many years. We've been audited by our auditors and the central bank, and all of these things that we have done have stood the test. So this was a mezzanine round of an investment property in Berlin, and that was the very first test case. We have another type here, and we talked earlier on, and there was questions about how you do this. This next one is a bond. So I think the thing that you can see here is that it's not the underlying property ever. And I think that's one of the big things that isn't in place. There's no jurisdiction that you have the actual properties themselves organized in such a way that you can transfer them by blockchain. So we're always talking about something layered on top, be it a debt or an equity or some sort of derivative, some sort of financial instrument. And that's where we are today until some fairly meaningful and large changes happen with the registry offices in all the different countries around the world that would allow the actual properties to be tokenized and used. And then we have a current one that we have at the moment, which is equity shares in a property, you know, that's currently live on the website, and you can take a look if you're interested. So we're in a situation where we have a lot of known unknowns and a lot of unknown unknowns. We're at a very beginning of a market. We're like e-commerce in 1994. We know it's going to be big. We know it's going to be exciting, but we don't exactly know where it's going to go. So it's great to be here on this webinar. It's great to be working with DigiShares. And if there's any questions, let's go for it. And maybe just before we go to questions, just a couple of observations. Gabriel, you mentioned the BlackRock tokenized fund. So the BlackRock USD Institutional Digital Liquidity Fund. So BlackRock, we all know, is very big. And I have it open here in front of me because one of the beautiful things about blockchain is transparency. And I can tell you that there's 21 token holders. So the mighty BlackRock organized 21 investors. And of them, you can see who some of them are. Ondo are nearly half of that. And Ondo are a DeFi platform. So again, I suppose, you know, they have got great credit for doing something new, and it's brilliant to see them in the market, but they have 21 investors. We have a long way to go to become mass market. We're at the beginning. Also, another comment from Richard about Uniswap. And I think you're absolutely correct from the US. I'm not a US person, I have no idea. But you can today, not on Uniswap, but you can buy a security for that was a tokenized T-bill that is done through, it's an offshore structure, obviously, and it's not for Americans and everything else, but you can buy it on Curve. And that's done by Matrixport out of Hong Kong. And it's got I'd say an offshore structure. So you have, maybe it doesn't work for US or maybe even EU customers at the moment, but you have, I suppose, people pushing the boundaries of what is possible and putting up securities in a way that are controllable for whom they're allowing to buy them on some of these venues. So we have that's why it's such an exciting part of the market at the moment. We have lots of people, including everyone on this call, pushing the boundaries.
Oh, thank you, Brian. That was really interesting about the BlackRock. I guess maybe we could compare it to Ethereum. When you look at the staking, you see Lido has a huge chunk, but then there's all these people behind Lido. I don't know if you think that's a fair comparison, but
maybe.
Yeah.
Maybe it's there and you can have a look and you can investigate the wallets and you can run the wallet kind of crawlers on top of it and things like that. But yeah, it could be that they're owned by trust companies and others that split it on downwards. It's possible.
Perfect. Well, what a great way to end this webinar. I'd like to thank you, Brian, and all the other speakers and everybody who's followed this webinar and asked questions. We've shattered the records for the number of questions. I think it's over 50 questions that we've answered live or in writing in the Q&A section. So yeah, thank you to everybody for participating, and hopefully we'll see most of you tomorrow on the DigiShares webinar, more focused on North America, or the next RE.X webinar. Thank you, everyone.